Today on Joe's credit tip of the week, we're going to talk about what's the best type of credit account to have on your credit bureau. Hey everyone, Joe Bladek with 14 years financing real estate experience. I'm going to talk about how to raise your credit score by using the right way to allocate credit accounts on your credit bureau. Obviously, there are credit cards. That's a type of credit account you can have on your credit bureau. It's a really good type of account to have because you can actually rebuild your credit score really quickly. It's also a really poor account to have because it's really easy to lower your credit score by just a few payments, and pretty drastically at that. Lines of credit are another good one, especially revolving lines of credit. If you use them, these can also be a good source of credit rebuilding, ways to increase your credit score, that sort of thing. Installment loans for things like vehicles or trailers or campers or trucks, ATVs, snowmobiles, boats, this sort of thing. Any installment loan whatsoever, this is a type of loan that comes out of your banking account automatically. And because it comes out automatically, it has a lower impact on your score. But because it is a loan account that could potentially bounce, it does impact your credit score still pretty significantly, so long as you're making those on-time payments. Okay, what about cell phone, internet, telecommunications credit accounts? These also report to your credit bureau. These report to your credit bureau on a monthly basis, showing the Equifax and TransUnion companies how well you're paying your credit on your cell phone and your telecommunications bill, TV, internet, that sort of thing. But they don't report any positive information. It's just negative. If you miss a payment, it's going to show negatively. If you make a payment, it's going to show neutral. Okay. Same goes for OSAP loans. Any OSAP student loans will be the same sort of thing like a telecommunications credit account. This will impact your credit negatively if you miss a payment, or neutrally if you make the payments on time. So what does that mean? Well, it means that if you're going to get any credit accounts to impact your credit score positively, make sure it's credit cards, number one, lines of credit, number two, and installment loans, number three. And that's the order I would process them in, and in importance as well. Make sure you always have at least one credit card reporting to your credit bureau, because that is a really easy way to build your credit. All right, and if you're thinking, what about insurance? What about home utilities? Well, that's a totally different thing, and for a whole different video. But for these purposes, it doesn't actually impact your credit score neutrally or positively or negatively. The only way it will impact your credit score negatively for those items is if they go to collection and the collection agency then registers something on your credit bureau. If you have any questions, book an appointment with me using the link in the video description below. And thanks for watching. This has been Joe Bladek. Talk to you later.